if you are one of those people who sold around 38,000, I have a couple things to tell you. Okay. Firstly, I don't know if I read this or a fellow trader, a fellow Elliottian. No, okay. I read about this in a trading manual that was specifically written for Elliott wave traders. And it went something like this. You want to get in the trade after wave 2, right? Which is, wave 1 and wave 2 gives you a good confirmation insofar as you can ever have a confirmation. And so you trade wave 3, which is usually the longest and the fastest Elliott wave. And this is all for the purposes of risk management. And to that same end, you want to sell wave 4. And it's said, I forget who said this exactly, but they said the best or the most pro traders sell wave 4 and they just forego wave 5. Does that mean you're going to leave some on the table? Yes, absolutely. But you're going to reduce your risk, and I'm going to tell you why in a second. Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is December 5th, 2023. And the question on most people's minds is Bitcoin going to continue going up, or is that it for the moment? Will we still do that whole retracement thing? This is what I want to address today, guys. If that sounds interesting to you, then watch until the very end. Let's get right into it. Let me start off by saying this is tricky. Anyone who says it's not is lying. It's tricky. And that's just the nature of the game. Technical analysis is tricky. Trading is tricky. But, I still believe with a high degree of probability that we're going to go down to the $31,000 level. And guys, mind you, if you've been watching me for quite some time, you'll know that I've been calling the $40,000 level. Although I didn't think that we're still going to hit the $40,000 level, my initial analysis on this run up, my target, my take profit was at the $40,000 level. And one of the main reasons for that was this. Taking this Fibonacci retracement tool, right, all the way from the top of this move, right here, to the bottom. Sorry, one second. Okay, here we go. From the top of this move to the bottom shows that the phi ratio is right at the $41,000 mark, okay, around the $41,000 mark, and that's pretty much where we're at. So it should not surprise anybody that we actually did hit the $41,000 level. Although it did surprise me, funny enough, and I'm going to tell you why in a second. But, when you zoom out and you just look at this, it makes sense. It makes sense that we hit this $41,000 level because, one, it's the phi ratio. Two, it's the technical target of this, this W pattern, right? Superimposed from the side of breakout, right? That's essentially what we got here. Okay, also, it is the target of this inverse head and shoulders right here. If you take this, right, from the top to bottom, superimposed from the side of breakout, you get 40,000. All right, anyway, there's so many reasons why 41,000 is likely our target and where we stop. So I'm not saying, hey, I was wrong, but I was right before, so don't hold me accountable. Like, I don't really care. I did think 38,000 was where we're going to stop this time because it looked as if, just examining the price action, we were distributing, but we were not in distribution, okay? And so one of the cool things, I don't know if cool is the right word, interesting things that I took away from this personally is that, just a reminder, these wave 4 complex corrections are crazy looking, and they can look super crazy, right? I was reading this as a distribution from here, okay? And I thought we were going to come up and come down here. But we put in a whole nother wave, okay? And so when you have a whole nother wave, this wave 5, this would be wave 5, right? So this would be now wave 4, a complex correction. And again, it's a up and to the right correction, right? Showing super amounts of strength, buying pressure, and resulting in this wave 5. Now, this wave 5 is most likely finished for the reasons I stated in the beginning of the video. And so, again, I still think we're coming down. And why do I think we're coming down to the $31,000 level? And I guess let me add one last reason why I think we're coming down around this point. Well, if you take your Fibonacci retracement tool from the bottom of our purported wave 1, okay, the beginning of this impulse to the top here, you see that your phi ratio is around 32K, which is close to the top. Let's zoom out for a second. It's close to the top of this pattern. And remember, this pattern we expect to be retested because it was 250 days, I believe, of resistance, has to be retested as support. So do expect for us to come back down here. If we kept going up, it just wouldn't make sense because it would eventually be saying, oh, it's not important to retest important resistance as new support. That isn't a thing. New resistance or old resistance as new support, RS flip, that is classical technical analysis, happens more often than not, if not all the time, when dealing with significant resistances. So we do expect that. This is kind of one of the reasons, if you are one of those people who sold around 38,000, I have a couple things to tell you. Okay. Firstly, I don't know if I read this or a fellow trader, a fellow Elliottian. No, okay. I read about this in a trading manual that was specifically written for Elliott wave traders. And it went something like this. You want to get in the trade after wave 2, right? Which is, wave 1 and wave 2 gives you a good confirmation insofar as you can ever have a confirmation. And so you trade wave 3, which is usually the longest and the fastest Elliott wave. And, this is all for the purposes of risk management. And, to that same end, you want to sell wave 4. And it's said, I forget who said this exactly, but they said the best or the most pro traders sell wave 4 and they just forego wave 5. Does that mean you're going to leave some on the table? Yes, absolutely. But you're going to reduce your risk, and I'm going to tell you why in a second. So wave 4 is typically where most pros take profit. So if you did take profit around the $38,000 region, you took profit like a pro. Taking profit like a pro means not necessarily getting in at the absolute, or trading like a pro means sometimes not necessarily getting in at the absolute bottom and not necessarily getting out at the absolute top. Okay? And I'm going to tell you why waiting for wave 5 is so dangerous. I'm going to tell you why. So when you look at an Elliott wave sequence, an impulsive sequence, wave 1, wave 2, wave 3, wave 4, wave 5, remember that initial break of structure, A wave, usually retraces about 100% or even more of wave 5. And it's quick. This is why most pros forego wave 5 altogether, because it's so risky. If you don't take profit at the right time, you'll end up losing. And so to kind of to avoid that drawdown, they just take profit over here, okay? And for those people who are still in the trade over here, be very careful, because if we do indeed find some resistance at this level and do retrace at this level, what you're going to see with a high degree of probability is a retracement first down to wave 4, maybe even all the way to the bottom of wave 4. I don't know exactly, but somewhere in the region of wave 4 for that initial breakup structure, right? And so that's what you can expect. That's what we typically see in these Elliott wave retracements. So be very careful. So those are the reasons why I think we're still coming back down. I think we're still coming down to 31K. Also, if you think about it probabilistically, let's say you did miss out on that wave 5, because I didn't know we were going to have a wave 5. I thought this was it, right? In full honesty, full transparency, I didn't know this wave 5 was coming, okay? Because this complex wave 4 correction I was trying to read a complex correction, trying to make heads and tails of it. It just, it looked like a distributive channel, and that's a typical mistake, because, when you're looking at corrective price action, intra-wave corrective price action, and the distributive corrective price action look similar. So it's not the end of the world if you took profit, but all I'll say is, when playing the probabilities, right, you look at this drawdown from here, right, where we were around the 38K level to our target of around 31K, that's around 18%, okay? And the gains you missed out on are about, if you went to the very top, 12%. So you may gain an extra 12%, or you for basically, when you're here, the calculus is such that either I lose 18% or I gain 12%. Probabilistically, you stand to lose more by not taking profit than to gain by letting it ride into a wave 5, which I don't know many people read. So that's pretty much the calculus. This is why, even though I missed this wave 5, I think my read on taking profit here and anticipating the drawdown at this point was still a valid one, and in terms of trading, it was a safe one. It was a conservative, careful decision, right? I like that, even in retrospect. And trust me, I'll tell you guys when I made shit analysis and I don't, I was completely wrong. Yes, I was wrong, but I would rather be wrong in that way, just because it protects, you're protected. In any case, on the topic of trading, I am still holding my shorts because I do believe we're coming down. And if you've noticed, altcoins have not come down as Bitcoin has come down. Or sorry, altcoins have not gone up as Bitcoin has gone up. They're in different market phases, right? Altcoins are still stuck in this channel of consolidation. And what you should expect to see with a high degree of probability in altcoins is a retracement right back down to the phi ratio, which coincides with the midline of this channel. And you all know, if you watch this channel, that when you're dealing with trading channels, the top resistance, the bottom support, and the midline are the most important aspects of the channel. And each and every one of those needs to be tested and retested before leaving the channel. The support has been tested and retested. The resistance has been tested and retested and retested. Now the midline must be retested. Very high probability trade of most altcoins is to the phi ratio of their preceding Elliott wave impulse to the upside. Although that may be a zigzag, right? 5 waves up and 3 waves down correctively, you're still doing the same calculus and trying to target for profit taking that phi ratio. Okay, so that's basically what I'm seeing on the charts. This is why I'm still in most of my shorts, and most of my shorts are in altcoins that are exhibiting this very same price action. 5 waves up, some distributive move. I'm looking for those 3 waves down. And then at that point, I'm looking to take profit and flip long. And I'm so excited to do that because I short crypto when I need to, but I much prefer longing it. Trust me. Okay. Last but not least, or actually, let's do 2 more things really quickly. Let's use the US dollar currency index as an indicator and see what we're doing here. Like I said, this DXY looks like it wants to go up, and it actually did. And I think it has a little more to go. And I would not be surprised if we got a breakout here. Given the magnitude of the drop that we're expecting in Bitcoin, I would not be surprised if the US dollar currency index gave us a breakout all the way back here, actually filling this gap, right? So all the way back here, and then ultimately coming back down for when Bitcoin finds support on 31K. Okay, so that's what I see with the DXY, and it's poised to do just that. Let's see on the daily time frame. Yeah, we're cross bullish and we're pointed up. On the weekly time frame, look at the weekly time frame for the US dollar currency index. I can't make this up. The weekly time frame of the US dollar currency index is about to cross bullish. It's completely oversold and it's ready to go, right? What do you see? You see 5 waves up, 3 waves down at the phi ratio. You don't even have to measure it if you look at this long enough. This is very likely going to happen, a move up here at the very least, some consolidation, and then maybe a move back down. So that's what I'm seeing with the US dollar currency index. This is another reason why I'm very much a proponent of Bitcoin dumping to 31K. Okay, although we've gotten a good move in that wave 5 to the 40K level, be very careful. I'll repeat everything that I've said before in my previous videos. Stands in principle. Obviously, I didn't get the top, but the principle stands that we're looking at a large retracement. And finally, I want to talk about Bitcoin dominance. Bitcoin dominance here is useful because it's important to understand just how bullish altcoins are looking against Bitcoin. Okay, right? That's the alt season we've been talking about. Altcoins are looking to demolish Bitcoin. Look at this right here. Okay, you have the Bitcoin dominance chart showing you that Bitcoin dominance is essentially at resistance and looking to flip down. Remember what that means. Bitcoin dominance going down means altcoins are dominating Bitcoin. Bitcoin is less dominant than altcoins. That happens in either 2 ways. One, either Bitcoin is going up more than altcoins, right? That happens sometimes. Or Bitcoin is going down more than altcoins. And that's rare, but I believe that you're going to see that here. And the reason for that is this. If you look again at Bitcoin's chart, see that it put in a massive move to the upside all the way to the 40K level. Now, because it went up so much, it's got to come down a little more. So if you measure that drawdown from where we're at right now, the $42,000 area, all the way back down to the $31,000, $32,000 area, that's approximately a 25% drop, okay? Conversely, if you look at altcoins, and this is an aggregate examination of altcoins, right? But some altcoins are already on support and like ready to go. But in the aggregate, altcoins have much less to go to the downside because they went up less. Does that make sense? So because altcoins were restricted in their travel to the upside, the downside is moderate. It's modest compared to Bitcoin. On this chart, it's only 18% on average, of course. Some will be more, others will be less. But you see, this is why everything fits. Bitcoin dominance coming down, meaning altcoins are going to come down less than Bitcoin in the aggregate. But still, some altcoins may also start pumping like now. And I'm going to show you how, if you look at your chart right here, let's look at our watch list. There are some altcoins, I think it's Stacks, up 40% today. Okay, granted, it pumped into resistance, which is not the greatest indication for continuation, right? It pumped into a level of resistance. But that being said, if you look at something like Blur, looks so bullish, looks really bullish. It looks like it's found support. I'm sorry. Blur looks like it's found support right here on this move, going up in 5 waves, coming down in 3, finding support. That is nice. That is really nice. That's very compelling. Another really nice compelling one is Synthetics, looking like it found support on the smaller time frame, okay, right here. And then DYDX is probably the most compelling that I've seen. It just looks so nice. 5 waves up, complex WXYXZ right on the phi ratio. I mean, any moment if DYDX starts bumping, not going to be surprised. Thing is, I don't like to trade against Bitcoin. If Bitcoin's going down, I'm much more comfortable in shorts. Although I understand that 1 or 2 altcoins are going to start going early, I'd rather let them go early rather than try to pick the one, out of 100 or 1,000 or 10,000 altcoins that's going to start their rally early. I just don't want to do that. I don't think it's prudent, so I don't do it. That's my analysis. I hope this was helpful. I hope this was useful. Like, share, and subscribe as always if you got value, and I'll see you later. Take care. Bye.
The thing